Welcome, everyone. Glad you're here today. And today we'll be hosting the Successful Capital Raise Forum discussion. It's going to be an exclusive glimpse at what you need to consider if you're raising capital for your new or even existing business. In this discussion today with our panelists, the host will reverse engineer successful fundraising stories and offer some insights from founders, investors, and field questions from the audience. I'm Jeffrey Campos, Executive Director of Global Chamber, Denver and Chicago. I will be moderating today's session, and I'm an entrepreneur in my own right, so I could appreciate what's being said today and discussed. Let's start with our first speaker today. We're gonna have Greg Tanner. He's the founder and managing partner of Aspen Capital. Since 1991, Greg has had his firsthand experience in building businesses from the ground up as an entrepreneur. His role has been as a founder, a CEO, and a salesperson. As the founder of Aspen Capital Fund, Greg used his comprehensive understanding of business experience and professional network to offer his expertise for startups and current businesses. He has built one of the only minority-focused startup advisors in the country. At Aspen Capital Fund, he has accumulated a broad range of knowledge on fundraising, finance, management, and marketing. He has an extensive experience preparing businesses for first-stage investment. Greg has participated in startups as an expert with over 60 early-stage companies. And also today, we're going to have Cam Waldron, a serial entrepreneur and co-founder of Mexiner. I hope I said that right. Cameron has been an entrepreneur since he was 14 years old. In March of 2020, he and his small team built Mexiner, a global e-commerce platform, went live in June of 2020 while finishing his bachelor's of innovation degree in international business. He is actively doing a capital raise and scaling his new venture to a $1 billion target. Now it gives me the great pleasure to introduce our first speaker. Let's start with Greg, and then we'll get to Cam after that. Greg, welcome.
Thanks, Jeff. I'm excited to talk a little bit about how you get started with capital raise here. And we'll have a Q&A session in the chat, and I'm going to stop halfway to answer some of the questions. And at the end, we'll have more time for discussion. It's really great to have Cam here because he's one of the entrepreneurs that I've worked with this year. He's been an entrepreneur, as you mentioned, all of his life, and this March stepped up his game to begin his first capital raise. Tell us a little bit about what your journey has been and what you learned, Cam.
Yep. So my name is Cameron. Short, a lot of people call me Cam, but yeah. So been working on it's called Mexiner. So you're close, Jeff. But basically, it's an e-commerce platform, and so it connects. Well, the goal is to connect manufacturers and suppliers in Mexico to consumers like myself and also larger companies to those manufacturers and suppliers in Mexico. So yeah, we really kind of ramped it up, me and my team. Kind of when COVID got started, just had a really good opportunity, kind of wanted to just jump on it. And so ultimately we decided to take the next step kind of into the capital raise strategy where we met up with Greg and stuff, and all of his expertise and just knowledge with it really helped us get started. And our capital raise strategy is specific to kind of a content marketing strategy in mind. So.
Thanks. So I'm going to share my screen here real quick so I can let's get this rolling here. Sorry. I hope everyone can see that now. Can you see that, Jeff?
We're good. We're good to go.
Okay, good. Okay, so I'd like to start with kind of just talking about a short story about two entrepreneurs I met up with in December, or I should say November but I met them over a year ago, almost 2 years ago.
Greg, can I interrupt you again? Can you give us a little background on Aspen Capital first?
Oh, yeah, sure. I'm sorry.
And then we'll go into the meats and bone of it.
Sure,
Thank
sure. I started Aspen Capital Fund back in 2008, 2009, after I had exited out of my, I had an IT company and I had sold it to what is now Accenture. And I basically took a thesis to follow, to invest into minority-owned businesses and specifically Hispanic businesses or Hispanic-focused businesses. And we had two funds. Our first fund was primarily that tenant to invest into minority businesses, and the second fund we've had that's fully subscribed as well. We focused on sports marketing and technology. As we went through that process through 2014, we started to see that many investors or entrepreneurs really just don't understand the process of capital raise. You know, they think it's a bank loan, or they're really struggling with, you know, how do they reach investors? It's a basically, you know, a trial and error approach that they used. And so we've kind of taken our insider knowledge and we've turned that back around to start coaching and mentoring entrepreneurs. And in 2015, I really bet down on investing in marketing automation and really developing a proprietary way to reach investors, to incorporate investors in everyone's network, the entrepreneurs network. So that's what we've been doing lately. Well, lately we've been focusing all of our efforts on a global scale. So that's one of the reasons why we've joined the Global Chamber, and we've seen a lot of really great success. It's been a lot of fun to meet entrepreneurs from all over the world, and we're looking to connect with more of those startups that are really dynamic in that space. Any questions now? How's that sound, Jeff?
Yeah, and thanks for the pitch about Global Chamber. We appreciate that all the time.
Sure. So I'd like to again start with this story about these two entrepreneurs, and you may have heard of Grant Cardone, and you may know Kevin Harrington. He's the guy that created As Seen on TV products. And so I met up with both of them in November, and Grant was really interesting. Grant in 2019, excuse me, said he was going to raise $100 million, and he was going to do it by going direct to the investors. And he told this in front of a super investor conference. And he said that he put that out there. I met up with him, and he said he didn't raise 100 million. He raised $300 million, and he did it only by social media, so YouTube, TikTok, Instagram, Facebook, etc. And I asked him why, and he's like, "Well, that's where the people are." And he said it's not about who knows me, it's about what they know about me that matters more than anything. So I thought that was really interesting because we've kind of doubled down in that process for finding investors. And he said that social media is really underplayed in the financial markets. And so he relied early on in his career on Fox Business TV, and now he says he can reach 1 million viewers through his social media platforms in a month versus a year. And Kevin Harrington also he was the original shark from Shark Tank, and he used to run all those ads that you see on TV about the gadgets, the Vitamixer and the rowing machine and those sort of things. And then in 2015, he said that he was moving his business completely to an online business and going 100% digital, which last year he finally completed that. So he doesn't do any more TV ads. It's all 100% online. And it kind of validated kind of the ideas that I've had that we'll talk through here in a little bit. So are there any questions about before we get started? No? Okay.
No, we're good.
So these are 7 strategies I always tell all of our entrepreneurs that they should do. So one of them is the first one is really take yourself seriously, and a lot of it is, it seems like maybe it's kind of obvious, but you'd be surprised at how many people don't take themselves seriously. And investors really recognize this right away. And I always kind of go through this really quick. It's the email address. It's using a Gmail or a Yahoo account when it really costs about $10 to get a domain, professional domain. They don't have a website, or they have a poorly logo and a poor brand, and that really affects people's the way that you invest money. I mean, investors have a lot of money that they're going to put out, and if you don't take yourself serious enough, they won't actually take you seriously. I mean, you've got to take yourself seriously, so you got to put a little bit of effort into what you're doing. And I always say, make sure you have positioning, make sure you have which we'll talk a little bit in the next slide. You have to have a one-liner. A lot of entrepreneurs can't describe themselves in one line. I mean, they have to take a paragraph, and that's you have to remember, investors get anywhere from 300 to 500 emails pitches a week, so they want it to be clear and concise. I always suggest that you have an advisory board that have people that can advise you in your business, that have experience, and have a small A team. That goes a long way. Even if you have 1 or 2 partners, it goes a long ways when you have an A team. An investor really sees that and takes that and knows that you're serious about what you're doing. I like to always say have a physical office location so that you can show that you're a real business, and you get your mail, and you have an office somewhere. And have a small hits track record. Saying that you have a team, an advisory board, a website, maybe you have some market research about your product. That goes a long way in terms of building a small track record. And when I talk about the unique position, it's all about you want to be in the winning, what I call the winning zone. That winning zone means that your brand or your idea is what consumers want in this magic place, and you have a brand, you have a differentiation that matters. So like for Cam, he's got a really cool idea because there's not really a marketplace that connects suppliers to consumers and manufacturers that's in one portal. It's still very much in the old-fashioned business, and so he's in the winning zone there. That's one of the reasons why I thought it was really great to work with him. And there's this thing called the dumb zone, when the consumer doesn't care about your brand or your position. And then there's the risk zone where you're just another widget in the market space. And obviously the losing zone you don't want to be into. So we can talk a little bit more if someone has any questions about that, but if not, I'm going to move to the next one. The next thing we talk about is probably the most overlooked part of the capital raise, and that's understanding your ideal investor. All of these things hinge on your success, and we'll talk about going local. So you want it to be maybe a 2-hour flight away from your ideal investor, so that you can make a connection. Obviously, during these times, it's a lot more difficult, but they're also becoming more adoptive of having online meetings and having meetings like we're doing here. So, and when you have an ideal investor, your words, your graphics, all come together very differently. So if you have an institutional investor, like a VC, you're gonna talk, and you're gonna have different types of graphics than you will, say, an angel investor or maybe a high net worth individual. And so those things are very important when you're talking to someone. You don't want to have like a casual conversation when you're working with an institutional investor like a VC or a venture capital company. and you may find your office location, like say if you live in Boulder or Silicon Valley or Cherry Creek, you might meet an investor, in the elevator or at lunchtime or something like that. Where you live also is a great place. Gym, a golf course, where you may meet investors. I've actually met an investor at my gym. I don't golf very much, but I know that investors are always golfing and tournaments and that sort of things. When I talk about deal flow, you want to understand what kind of deals they like to look at. So if you're a healthcare or a health tech company or a fintech company, you want to talk to those types of investors. You don't want to necessarily talk to someone that, say, for instance, invests only in cannabis. So it's understanding what that investor is looking for in terms of how they develop or they do their deal flow. So you want to make sure that ideal investor, you're talking to those, and don't blanket email and just because you think it's an investor. You want to target the right investors so that you can get the meetings faster. Remove the trial and error as much as possible. You always want to have terms that are attractive versus very generic terms. So that's what investors really like to see. Investors want you to understand this information because it makes them more money faster. The process is easier. They don't waste a lot of time. So all of these things they're looking for from you as an entrepreneur when you're doing a capital raise. Service providers. So depending on your ideal investor, you may have to deal with, like a VC may want a CPA or a holding company to hold the capital. A private investor also may want you to get audited every year and have those sorts of reports. They may have a minimum investment. Some have a minimum investment of $10 million. So if you're only trying to raise a couple of $100,000, it doesn't make sense for you to reach out to those types of investors. And 100% customized. All of this should be customized to your ideal investors, your graphics, your words, your terms, and how you're going to look for those guys. So I'm gonna break for a Q&A here, and we'll go from there. Let's go through Q&A for the chat.
Greg, one of the questions I would have is that when do you start raising capital? Maybe currently you're not in the position of doing it, but when do you start working on that process? Is that something that a business should be considering?
Yeah. So if you don't need capital, that's the best time to start raising capital because it takes time, and also it's also a great way to build a rapport with an investor and develop a relationship, because now you can have a relationship with the investor without any ask for it. And the best thing I tell entrepreneurs is say, hey, I'm going to build this, and then I'm going to do this, that, and build this, and then when you come back and you've shown the investor, like, hey, here's what I built, and here's where we're at in the process. That's a great way to build trust in the investor, because the investor is now like, hey, you've actually said you're going to do something, and you've done it. And now when you go back to say, hey, well, we're going to start raising capital, that investor is going to have some trust in your relationship already.
What are some of the strategies that a business could start building that trust with a potential investor?
Well, I think the number one way that you can build trust with an investor is doing a 2-minute video, because it shows that you're a real person. It also says a lot about how how you resonate, what type of conviction, what we'll talk about later, about your deal. That's the real easiest one. I think if you write a case study or if you write a paper, you can add value and trust that way with an investor, where hey, the investor's going to actually read something and get something out of it. That's a great way to build trust too.
All right, I got another question came on. Can you talk a little about what you would do with the capital raise and how to structure the exchange options for the capital? I'm reading through that. How the structure of exchange options for the capital, what the investor gets for their dollars,
Okay,
That was a question that was thrown out there, and it's
that's a good question. We could spend an hour on that, but so there's straight up equity where you can say, okay, for let's say $100,000, you can get 10% of my company. You can also do debt equity, which is a notes payable, with the option to turn into equity, where you can do that. There's royalties. You can do a royalty where you get a percentage of the gross sales per year, and for a certain amount for what you put your money into, and then that can convert to equity, which that goes from very simple to very complex really fast. Those are kind of the straightforward deals that you can do. There's all sorts of different ways you can do, like if you've got a real estate play in there, you can have the real estate play as the equity. You can do venture debt if you're actually making money. So there's a lot of different ways that you can structure your capital raise.
great. Well, that's all we have right now, Greg. You could continue in your presentation then.
So the next thing we talk through is kind of is the conviction equals capital, and this is the number one thing that you're really chasing after, in terms of what the whole capital raise is all about, is building trust with an investor. And what does that mean? It's you can build trust through a lot of different ways: sincerity, reliability, commitment, consistency, competence. We talk about the three trust cutters all the time, but conviction is really really where I say conviction equals capital. It means that you're going to do right to your investor by all means, and give the investor a peace of mind at night that they're going to sleep. They're not going to worry about you killing them. I always say have an A team, have A players on your team, because A players only play with A players, B players only play for A players, and C players only play for themselves as well. So always have A players, and just be outstanding and good at what you do. You're going to get better if you have a lot of trust and conviction. You're also going to get better at how you pitch. You're going to get better about how you see, you talk with your potential investors, your ideal investors, and always have like a long-term thought, not a short-term thought. And that's really what investors are looking for. There's no get rich quick schemes when you're trying to reach out to an investor. Momentum. So momentum is great, and I have a flywheel on here because a flywheel it takes a lot of energy to get the momentum, but once you get that momentum, you're going to get more energy out of it than you put into it when you started it. So you want to speed up your flywheel, and that's the same concept goes for how you do your capital raise. So I always tell people, go for a small deal, go for small investors, go for small deals. You'll get quick wins, and you'll start to have better stories. You'll start to have better deals because you've already got a track record. You're going to become more articulate about how you're doing your deal. You're going to have better thought leadership, so you're going to have ways to tell your story over the internet through your content marketing. You're going to have more credibility because you've got these small wins. You're going to get more investor leads. You may meet an investor and they're like, oh, well, hey, you got a great story here, but I don't, this deal isn't for me, but I know someone that I'd like to introduce you to. You're going to have a longer track record. So as you go with smaller deals, you're going to get better with your materials. You're going to get more progress per hour. You're going to have better offices that you connect with. You're going to have more exclusivity because you're going to get better at how you pitch your positioning. You're going to start to become number one in your niche because you've got capital that you're driving into your deal. You're going to get critical mass, and hopefully you'll become a market leader. That's what building momentum is. So I always say start small so you can build that flywheel. A lot of this next slide is a lot
Before you go
about.
into your next topic, can I just ask another question?
Sure.
Can you give us a real life example of how a business would start with a smaller investment and getting momentum to get into larger dollars as they start to grow?
Sure. So, I mean, we can use Cam as an example here. So, Cam started with, we started with the idea that, hey, can we do it? And then he built the app. He's got an MVP, a minimal viable product. And then instead of him going, so he's got a valuation at $1 billion, but instead of him going, I'm going to go raise $50 million, I'm going to go raise a couple $100,000 or $100,000. Then once he's raised $100,000, now he steps up, like maybe I'll raise $500,000. And then he steps up and is going to his next round. So he'll have a series of capital raises versus just one large capital raise, because now he's got momentum, right? So he's like 10 months into his startup, and he's already got a startup running and rolling, and he's got his first round of the initial seed money. So now he's able to start to talk to investors and say, here's what I built, here's how much I've raised, I'm looking for this amount, and he's getting better and better at it.
Great.
So the next challenge is I always get is, most people that they're out doing a capital raise is, hey, I'm sending out emails to these investors and no one's getting back to me, right? So this is where persistent but polite comes into play. A lot of times investors don't get back to you because you look just like any other deal. And that's one thing. The other thing is that there's just a lot of people reaching out. So try different things. I like direct mail a lot because nobody sends those out. It's expensive. But if you send a mail out, it's probably going to get seen more than an email. So you want to be low stress about it. You don't want to be annoying. That's for sure. You want to be highly professional. You never want to contact and connect with an investor or follow up with an investor more than twice a week, unless of course you do have a relationship with that investor or that type of investor. And you never want to do more than three times a month, especially if you don't know the investor. But again, be polite, be professional, and diversify your mode. Like if you got their phone number, maybe text them, maybe call them. Again, maybe do some direct mail. Always be concise. Don't send a large full page deck and a long description. Maybe have a short sentence, your teaser, and 3 bullet points and a call to action that's easy, and that's it. Don't send much more than that in your email. Don't have a false sense of urgency or scarcity, like hurry before this deal doesn't end, unless it's genuinely true. If you're looking for that last investor and you say, hey, I want to get the last investor, would you be interested? That's okay to be genuine, but don't make any falsehoods in there. Always have a 100% institutional look and feel. Don't send anything that's unprofessional. Never use exclamation points. Never use all caps because it seems like you're yelling. You probably need to do about 12 to 30 follow-ups, and you've got to have like a medium-term game. It's not a short-term, hey, I need this capital like in 2 or 3 months, because that's one red flag that turns an investor away, because they feel like you're hurried and you're going to die and kill their money in the short term. So have a medium-term mindset. Number 8, or 7, I should say, page 8, excuse me. Base hits, iterate and learn. So good is the enemy. So if you've ever read the book Good to Great, you always want to be great. So don't be complacent saying, oh, that's good enough for me, or that we're good to go. Always get fast feedback. It's better to get get more no's, because then at least you can start to grade yourself. when you're raising capital, minor leagues are friends and family, or your golf buddies. You really want to start raising capital from the sophisticated people. So you want to go from friends and family to angels to venture capital to private equity. That's the end goal if you're trying to raise a substantial amount of money, $10 to $15 million. Get 30 ducks in a row and have 3 compelling aspects about your deal. Offer a compelling offer is always 100% better than trying to convince somebody. So if you have something compelling, it's better than trying to convince somebody to invest. If you want to be compelling always, you want to be anti-frail. So become stronger as you're building your business. That's always good. Just business 101. Always have specialized knowledge versus worthless knowledge. So for Cam, he understands, how that Mexican market does business, what NAFTA means for his business, and then how the consumers work. So having that specialized knowledge is much better than having worthless knowledge. I always say join a community of peers. So obviously I have peers at the Global Chamber, but I'm also part of a super investors group, and I'm also part of Signals Group, which is all sorts of entrepreneurs like Grant Cardone and Kevin Harrington and a bunch of others. So that's the 7 tips. Now we'd like to open it for discussion and more Q&A.
Let's hear a little more from Cam. How about I'd love to learn how his company was built and the ultimate strategies for his cap raise.
Yeah, absolutely. And I think kind of this image that's on the screen is kind of a good way to lead into that too. Is the whole point of innovation is disruption, and it's the fact that when we had the idea of Mayoneer, it didn't have to be a new idea. It didn't have to be just built from scratch. It just had to mimic the systems of companies that are already out there doing that, and then to just do it better, but also just push it a different way. And that was kind of our goal. So like a lot of you are probably familiar with Alibaba. It's essentially kind of what we want to do, and we've really analyzed them and dug into them deep. They connect suppliers and manufacturers, in China and throughout other areas to individuals and small businesses, in the States for a much cheaper price. And so that's essentially what we're built around. And so we basically, like Greg was talking about, we developed a platform and focused on creating our minimal viable product, which, simply put, just means that the idea that you have, whether it's a product or a service, can work on its own. And so it really is essential before you start your capital raise, because you're able to just take something to the investor and actually have something hard to pitch. And so that's basically what we did first. And then we really just pushed hard and focused hard on social media, because social media is great. Like Grant Cardone said and Greg referenced, that's where everyone is now. I'm much younger in my generation. I mean, people will sit on social media for hours and just watch. And so I think that's what's been really crucial for us, is that just starting to make that presence, so that when we go to an investor, it shows, we've been around, here's what we're doing, and here's our goal, and everything else just kind of seems to follow.
Tell us a little about your company. I'm interested to hear what you're doing.
So Mayoneer right now, so kind of like Grant said, we're in the initial stages of our capital raise. So really just trying to find kind of the right investors, and most likely ours will be equity investing, like Greg was explaining. So, a portion of the company for, X amount of dollars. And so, so that's kind of what we've focused on. We've relied a lot.
What's the service you offer?
Oh, okay. Sorry. Yeah. So,
yeah.
Yep.
Sorry.
So Mayoneer is a website. You guys can search it. It's live. Mayoneer. So MEXUNIR.com. So it's a web platform that basically allows, whether large scale manufacturers or very small businesses in Mexico to apply for the service. They can sign up on our website, and then, we can help with creating ads, taking photos of their products, kind of the whole 9 miles, to just help them grow their business and connect with people that want to purchase their products, in the States. So basically it's just a website. People can sign up whether you're a consumer or you're a supplier, and it's connecting the two to allow, a global exchange of goods.
Great. Okay. Sounds exciting.
Yeah, very fun.
Greg, back to you. There was a question came up. What do you mean by 30 ducks?
30 ducks. So all sort, we will start small. 1, you got a professional email. 2, you have a website. 3, you have an MVP. 4, you've got a teaser. You've got a 1-pager. You've got a deck. You've got team bios. You got a team put together. So it can be any of those things, right? Where you can have, once you get past maybe that, then you can go, oh, I have an investor. I'm looking for my second round of investment. I'm looking for, I'm starting to grow my company and I'm getting customers. I'm on track to make $10 million, for 4 years, something like that. So basically having, things in place that you can go to. So.
Okay, great. Back to Cam. Cam, there was a question came up. What does your company do to drive traffic to your site? And are you
Yep.
worried about competing with the Amazons and the eBays of the world?
Yeah, so in terms of competition, absolutely. I think it's one of those things when you're creating, any product or service, you can always fear for the future and where the progression of business is going. But being able to compete and challenge those large companies and find, your niche market or, what service you're providing that they aren't, I think that's really where you're able to, kind of just squeeze into the cracks and steal some business. And so we're not really worried about that. In terms of driving business to our site, the main thing we focused on is search engine optimization, so SEO. So if you're not familiar with that, it's basically as simple as we want to be the first thing that pops up on the internet when you're searching, any keyword. So cheaper goods or goods for my company. Or imports from Mexico. We want to be the first thing that you see, and that's what search engine optimization is, put simply. And so we focused a lot on that, and that's done really well. So that's the main way we drive traffic.
Great. Greg, back to you. You talked about an emphasis on a strong pitch and strong one-liners. Can you elaborate what would be some of the key strategies that an individual, when they're looking to put that together, to make sure that that's in place?
Yeah, so start about having a single way of describing your business. So basically being able to say, I make widgets in Boulder that serve moms in the 27 to 45 age group across the US, something like that, maybe. That's a one-liner pitch. To talk about your market reach, and what you're offering to that marketplace. That's more about the teaser than the pitch itself. Being able to get in front of an investor and explaining in about 3.5 minutes what you have to offer and why they want to meet with you is really good. And I think having a one-pager that summarizes your deal really clearly and concisely and differently. Use colors, has your brand, has a professional headshot with your bio, and then your pitch deck. And your pitch deck really has to stand on its own if you're going to just send it off blindly, which I don't recommend that you do. I think your pitch deck needs to be customized 100% to each person that you're going to send it to, so that you're not, till your investor feels like he's got more of a relationship with you, rather than this is just a deck that I've seen coming across my deck.
I wanted to ask, how does Cam kind of touch the social media importance of how he helps that grow his business? What about when you're looking to do a capital raise? How important is social media, and which outlets are the ones that you would really look at putting together a brand for yourself?
Yeah. Yeah. So there's a lot of things that you need to do. So with Mayunir, we did a ton of SEO for him and as well as social media. And that the way what we did was is we targeted towards an ideal investor. So we went and we're stalking investors on Twitter. It's the easiest way to interact with them. And we put our deal out there. We say, hey, we're looking for investors, and we interact. We do a thing called immerse and converse, which is basically stalking people on Twitter and LinkedIn, and we'll interact with them, and we'll say, oh, we noticed that you posted your dog, and we'll send an email, a teaser out in that email saying, hey, Cam here we know each other from Twitter, and this is maybe something you're interested in. Here's my teaser. What do you think of that? And then that's the way we get an investor to come back. So it's very important. And like I said, Grant Cardone raised $300 million. I think he's the only one that's raised that much money, only doing social media through his channels, which is, so I think it's very important. People are there, and not all investors are on Facebook perhaps, but there's a lot of them on Twitter, and then obviously LinkedIn. So those two things are really good. Twitter I like a lot because I can follow anybody. There's no window or door in front. Like LinkedIn, some investors want to know, hey, do you have my email? How do I know you? If they don't just blanket receive everybody. So I think it's really important to do it. It's a great way to say that you're real, right? I mean, when you go to validate somebody, the first thing they do is, okay, I'm going to go, do they have a website? Do they have a Twitter account? Do they have a Facebook account? Do they have any content there, right? That's why that's important.
Okay, I got a few more questions for you, Greg. How are you handling dilution when you're doing a series of small offerings? And how do you remain positioned to have enough equity to be allocated to a large financing down the road?
Well, I mean, that's a good question. Well, you don't, if at all possible, don't start giving out a ton of equity. That's the first part. Give out small pieces of equity. Obviously, your first investors are going to have probably the best deal because they're going to get out of that deal as soon as possible. They're going to make that. So they're going to need to make it attractive for those guys. But as investors come on, you can start to squeeze that because you're going to have more value in your company, and you should have more value if you're going to start growing your company. So that's the way but most founders, like you see when they're exiting, let's say at $100 million, most of those founders end up with maybe only 10, 12%, 8% of their company. I mean, it's hard to avoid doing that, especially as you grow into those larger numbers.
Okay, will you go in a little more in depth and provide more details on how to be investment ready, due diligence, preparedness?
Sure. Well, I think investment ready means, like where Cam stands, he's got an MVP in place. You can see it, you can touch it, you can go through that process. He's got a valuation, which we did for him, professional valuation. So that's good. In terms of due diligence, like, the best way to get to know an investor is become Facebook friends with them. I think people freak out about that, but investor really wants to know, hey, who is that guy? What is he doing on the weekends? Is he someone we can trust? So in that due diligence now is even more important because you're not meeting those people. So I think that's really important to have those social media outlets, and being able to connect with investors on all of your network is going to show good due diligence for you. I think a due diligence in terms of, it depends on how much money you're looking for. So some angels are going to go off of a trust factor. Other like VCs or sophisticated investors are going to really want to see, like, okay, who are your service providers? what are you doing? What kind of things do you have? Do you have intellectual property that you can protect? So those are all things. I hope that answered that, Fred.
Another question we have is, I mean, even after hearing everything we've been talking about for the last 50 minutes, it's overwhelming. The process is just something that a company really kind of shies away from, but they know they need capital. How do you get help? Where do you go out and get help and try to define what the best way to do a capital raise?
The best way, I mean, obviously working with an insider like us is great. I mean, Aspen Capital Fund, we've got a lot of really great things that you get from us. You get to work with us one-on-one, so it's not like you're working in like an incubator or an accelerator. It's also shorter term. So incubators and accelerators make you go there for months, and they really don't show you how to do capital raise. They're there to, they're bringing people in there so that their investors will invest into those incubators. And so not everybody comes out with an investment piece in terms of an incubator and accelerator. And so we have a large database that we can offer, that we help people curate. So with Cam, we help him identify as 100 ideal investors through this investor database. So we're targeting Latin American investors specifically. We have an immerse and converse process that's like no other. And that's really showing you how to pitch to an investor, get a successful meeting, make sure they're listening to you. We help you pitch. So we say, hey, you're doing a great job with your pitch, or you're really bad with your pitch. Here's how I would improve it. We help with reach outs. If you don't know what to say in an email, we have templates for that. We help do introductions. We help find investors and say, hey, this is where we go. So basically, it's a ask me anything process for an Aspen Capital Fund. And we got a great team to work with.
Okay.
Did that answer your question, Larry?
Yeah, it's kind of, the only thing I think is, what's the difference between the benefits of Aspen Capital versus incubators and accelerators?
Yeah, I mean, we're kind of like, I would call us a hyper accelerator, not a, so we can, if you actually have time, dedicate, a solid week with your team, we can get you through an accelerator type and get you venture ready in about a week. And that means us spending about 32 hours with you one-on-one.
Is there an amount that a company could look at? I mean, how small and how large is something that they could consider?
In terms of investment or the fees or
money? I'm sorry, money.
Money.
Investment, yeah.
I mean, Cam, we started with 25K. So that's the small. And we think our sweet spot's probably around 3 million, anywhere from 3 to 5 million. Anything that gets up and above that, I'd recommend probably maybe going to a broker dealer, because it's tough to raise that kind of money. It's kind of a 5 to 10 million is kind of like a no-go zone, I feel like, because the people that want to give you that amount of money that's on the very low end, they like to do like 10 to 50 million. So like 5 million is kind of like almost too small for them.
Okay. Let's see, we have, I think we had some other questions here. Oh, here it says, I think you might have mentioned it, but your reach is not only domestic, right? You also get involved in startups outside of the US?
Yes, we do. We help startups outside of the US, especially if they're looking for US investors, but obviously we can help them, go through the process, understand that process on a global scale. And that's kind of our goal for the next 15 to 18 months, is really start to put a global footprint, start working with global startups throughout. And that, again, that's why we're part of the Global Chamber.
Okay. All right, I think that's all we have on questions. You want to have any closing comments from you, Greg, and Cam at the same time?
Cam, do you have anything?
I'll go first. I think if obviously we talked about a lot of stuff and it comes fast and it comes at you like a lot, but I think the main thing to take away is kind of what Greg said, and it's that you can't start too soon, because if you wait until you really need the capital or you're really tight, then the process is just going to be even more stressful. Because now, like Greg said, now you're relying on it. And I think that any investor who's experienced with that is going to be able to, read you like an open book, if whether you're, starting and you're just hungry versus, you've been in it and now you're stressed and you're desperate. So I think that'd be the one thing I'd say to close.
We had one more question from Fred. So how do our fees work? So our fees are we work on a deferred rate. So you don't pay us until we start working and deliver the projects to you. So we do the work and then you pay us for it. And we're I wouldn't say we're very expensive, but we're not very cheap. But I think the value that we offer and the way that we can speed up your flywheel is immense. A lot of people want us to just want to buy just our database. We don't want to do that, because then you would poison the database for us. So we want to make sure that you're doing a really good job of immersing, conversing, and talking. Because investors want seasoned deal flow from us. And if we say, oh, here's the database, and you send out some emails, you make a $100,000 mistake of not looking professional, it also reflects on us. Hope that answers your question. And Fred, if you have more questions, you can email me directly. I'll put my email here.
Okay, and Werner put his contact information in there for you.
Okay. And
All right, you want to have some closing comments, Greg? Any closing comments for you?
Yeah. Yeah, I've got Werner's.
Okay.
Und ich spreche Deutsch, Werner. Ich liebe ins Weiß für eine Ari.
Well, he can't reply to you, so unless he does it in writing.
But anyway, Werner, I lived in Switzerland for a year and spent a handful of summers out there as well.
And Greg, can you just repeat your email address?
Yeah, my email address is greg.tanner@aspencapitalfund.com.
And your company website?
It's aspencapitalfund.com. And you can follow me on Twitter at aspencapfund.com as well.
All right, closing comment, Greg?
No, I want to thank everybody, thank the chamber for hosting me, and I hope we're going to do more of these talks monthly next year, and we'll have more Ask Me Anything kind of forums. So really excited, and I'm here to answer any questions if you need anything.
And I think it's really great to bring some really examples like Cam being with us today, giving a real live feel for what he's gone through in that. So keep that in mind in the future. It'd be great to bring some more successful stories that people can really get motivated on.
Yeah, sounds good.
All right, everyone. Well, thank you for attending today. I hope this helped, and we'll look forward to seeing you on future events. I'd like to mention that we have some that's kind of related. Upcoming, we're going to have current trends in M&A during the pandemic. You can look that up on our globalchamber.org events page, and that's coming up in the next week or so. So thank you again for being part of our program today, and I hope this helped. Any questions, feel free to reach out to Greg and also to myself if you have any interest, or if there's anybody you need the contact of. We're always here to help and support you. Everybody have a great day and great weekend ahead.
Thank you.
Thank you so much. Goodbye, everyone.
Bye.
Thanks, Jeff.
All right, Cam, thanks. Great meeting you.
You too.
Cam, I'm going to send you some info on Global Chamber. Yep, he left.